Okay, good afternoon, everyone. My name is Paul Michael Angelo, and I am an equity research analyst here at First Metro Securities. Right now, today, I'm going to give you a monthly wrap up of what happened for the month of July. So, let's begin. First, again, for those new to this webinar, this segment is usually divided into three. First, we have our summary for July 2019, what to watch out for August 2019, and our stock picks as always. So, what really happened for 2019? So, the market ended a moment ago by 8,045.80 points, still above the 8,000 support level, which we have mentioned in our weekly report. So if you want to be more updated on a weekly basis, feel free to look at our weekly report. It's just located on research and other reports weekly. Now, going back, so if you're going to look at it on a month-to-month basis, we actually went up by 46 points, even though just on an intraday basis, we went down by 100 points. This decline is attributable to a lot of conditions. First, we have the International Monetary Fund further slashing our growth forecast to 6.0%. Recall that as early as the beginning of the year, the IMF has already mentioned that the GDP of the country for 2019 would be at around 6.5%, which is quite decent actually, considering that the target of the government is something at around 6% to 7%. Another thing that made uh, the market decline is that a BSP Monetary Board member named Bruce J. Tolentino made dampened expectations of a policy and reserve requirement ratio cut in the near term. He stated that the BSP has more room to wait for economic data before finally deciding to cut down interest rates, both policy and RRR. We have to take note that these monetary policy decisions are important so as to balance the economy of the country. Now, we've mentioned you the reasons why the market went down. Now we're going to tell you why it went up, at least for the month. First, we have the dovish US Fed and the BSP. Even though there is a monetary board member that said that the rates could wait for more data, we have a governor who's actually quite dovish, meaning he's really pushing to cut the rates in the RRR. Just for the sake of those people who do not know what an RRR means, it means reserve requirement ratios. These are the funds that are just allocated to the Bangko Sentral ng Pilipinas, and it's just stayed there for liquidity purposes. Currently, the rate is around 19%. So if the rates are cut, the RRRs are cut, this means that there will be more funds that will get out of the funds of the BSP back to the banks, and these funds will be used by these banks in order to conduct their businesses. These funds, they could use it for loans, they could use it for treasuries, and for corporate usage, for general working purposes. So another event is the U.S.-China trade truce. We know we have been telling our clients for the past few months that the US and China trade related issues are quite material to the market because whatever happens between the two will really affect the global economy. And not necessarily, there are views that the Philippines might not really be affected because it's just between the US and China. But you have to take note that our other foreign partners in trade, for example, Korea, Japan, is also reliant on US and China. So there may not be a direct effect as to the country, but indirectly we are affected. So dismiss the idea that the Philippines will not be affected by the US-China trade war in case it happens, because we are really affected by it. Surprisingly, we also have strong net foreign buying for the week. For the month, primarily attributable to the companies like Aguilar and BPI. And lastly, we have lower than expected inflation figures. Actual data is around 2.7% versus expectations of around 2.8%. Recall that if you're going to dissect data in terms of inflation, the lower the better. And surprisingly, I know, not surprisingly, and as expected, the government delivered. Actually, the BSP has already mentioned its estimated inflation figures for the month of July. And that would be at a range of around 2.0 to 2.8%. So it's still low. So I guess if we're going to make trading decisions in relation to inflation, it's pretty much already on the downside. So if you invested as early as the beginning of the year, January 2, 2019, you might have already garnered around 7.8% because the market already went up by 580, almost 580 points within that duration on a year-to-date basis. So that's the fundamental reasons. Now let's get to the technical reasons. Let's just look at the charts of the PSEI. So as you can see, there are two lines between here and here, the supports and the resistance levels. There's a support level somewhere here at 7,850, and the resistance level is at around 8,100. This is last June, but as we all know, it was penetrated. The resistance has been penetrated at 8,100, and we were able to see the market touch as high as 8,400. But at that level, we already see high selling pressure. And normally, because of this strong upward trajectory, if the resistance was not able to successfully break out of resistance of the next resistance level, chances are we might see some corrections. And as of the moment, that is now happening. This is a correction of what's currently happening. So, what do we have to watch out for next month, August? First, we have the second quarter 2019 and first half of 2019 earnings. This is already ongoing. It began as early as last week, and out of the 30 companies that are included in the PSEI, around 6 have already reported. 4 of them are in line with expectations. 2 of them slightly below. I'm talking about Aboitiz Power and Aboitiz Equity Ventures. Reason for the below expectations. Reason for the income decline, income expectations being lower than expected for the Aboitiz Group is because of higher spot prices in electricity. And so that literally just means higher costs in generating electricity. That's why their margins were contracted. So we are waiting for 24 more, all of which will be released next week. Within the next 2 weeks. Usually deadline is on August 15. Next, we have the July 2019 Philippine inflation data. This will be released next week. Also, August 6, we have to, as I've mentioned earlier, the BSP has already made the pronouncement that their estimated range for the inflation for July 2019 is somewhere around 2.0% to 2.8%. Still below compared to a year-on-year basis because we really have a high base last year. Next is the US FOMC interest rate decision. This will be decided Friday, Philippine time. It's August 1 on US time. So we have been hearing this a lot in the news that there is an expectation of 25 basis point cut. So why does it matter? Well, it does matter because if the US decided to cut rates, it means the market might find other resources, might find other investment countries to invest their money in. If you have lower rates, chances are I would not park my money there. I would look for other investment opportunities outside US, and that includes the Philippines. So that's why if the cut would be higher than expectations. By the way, consensus is only a 25 basis points cut. So if we see higher cuts, at around 50 basis points, we consider it as unwarranted, and we might see this might be considered as an upside for the Philippine market. This is, I guess, this is the biggest thing that we have to take into consideration is the August 2019 MSCI rebalancing. We have to take note that we've already mentioned this as early as February of 2019, and it already happened in May 2019. So if you're going to look at the charts, price of the PSEI actually went down upon announcement of the issues in the PSEI that will be affected by the rebalancing. For those who are not familiar with the concept of MSCI rebalancing, let me just explain it. MSCI is a ratings company who gives guidance to foreign investors on what to invest and what not to invest. If they say something, it could materially affect the market. So for example, if MSCI says to reduce position on a particular stock, those investors who follow the MSCI will follow the MSCI and they will reduce their positions in the country. So this time it's a bit different because right now the MSCI made a recommendation that they made a recommendation to go to China. And so they allotted a new fund, MSCI China Shares. And right now, they need to get more liquidity from other countries, the Philippines included. If the liquidity in the country, in the Philippines, is required to be pulled out so that it will be going to China because of the China A shares, it means that the market will have to be sold down in order to fulfill that requirement. That's why we expect further downside beginning next week because the ratings, the MSCI announcement, the rebalancing announcement will be announced on August 8th. And the effectivity date will be on the last day of August. Of course, we always have to have a closer look on the US-China trade developments. This week, the US and China trade ministers are already in Shanghai, China. This is a face-to-face meeting, and there seems to be some pessimistic views as to this meeting, meaning at least on an analyst perspective, they do not see any further development, positive development between the two countries. So we don't expect any positive sentiment, at least in the short end. Also, I think President Trump made another tweet mentioning that China trade talks is still a long way to go. So I guess that's pretty much it. That already gave you the tone as to the status of these trade developments. Okay, we have the second quarter 2019 GDP and BSP Monetary Board meeting. This is pretty much another thing that you have to look out for because if the BSP decides to cut the reserve requirement ratios, it will be positive for banks. And if the GDP is better than expectations, it means that the country is growing well, which is a positive sentiment for the country, which could trigger the market to go upwards. Not to mention, we haven't included here in the slide, but this is quite important because August 2019 is also the ghost month. There is sentiment that if there is, according to Chinese tradition, you should not undertake any transaction during the ghost month. So it may be superstitious in nature, but some investors are really observing this kind of tradition, so to say, and it really is affecting the markets on a downward basis. So there you have it. So based on what I've said the overall theme for August is pretty much on a downward basis. So we expect the 8,000 level to be tested, if not broken, at least for the month of August. With that being said, we go now to our buy picks. If you have been with us for the past 6 months, we have been making recommendations of the following stocks. We have Fly, DM1 Tesla, Mega World, RLC, Mega Wide, BDO, Pure Gold, and Cebu Pacific. I will not reiterate the reasons why we chose these picks anymore because we have pretty much established our reasons now. But um, among the 8 recommendations that we have, among the 8 buy picks that we are just more focused on those shares which have more upside. And I have if you're going to look into the slides, I've highlighted them. I made them to bold letters. So it's Fly, DM, Wenceslao, and Pure Gold. I highlighted them because of the potential upsides that we have. I did not include Mega Wide as of the moment because even though there is a very huge upside, Mega Wide still has a wait and see stance because we're just awaiting the second quarter earnings of Mega Wide just to ensure if there's an update on their construction revenues, because recall that from first quarter 2019 there was a challenge with their construction revenues on account of permitting issues which is outside the control of Megawide. Now, going back to the 3 issues that I want to highlight to. First, we have Philinvest Land Inc. This is a new recommendation made by our property analyst. Our fair value for Fly is around 2 pesos and 20 cents, which gives you a 15.8% upside as compared to its last closing price just a moment ago. Reason for the good call for Philinvest Land is because we consider this as a recovery play. Not to mention that Fly has exposures on interesting properties, ongoing infrastructure developments like the New Clark City, because Fly has ongoing projects in the Clark City, which as we all know, is being supported by the government. So that's a potential upside for Philinvest Land, and most of the market has already noticed it already. That's why as early as May, prices have begun to pick up. But even at these levels, we are seeing we're still seeing upside, because if you're going to look at the if you're going to look at the book value of Philinvest Land, it's still cheaper as compared to its peers in the industry. Next, we have DM1 Slao. Our target price is around 13 pesos and 20 cents. That represents around 20% upside as compared to last closing price a moment ago. Reason for the recommendation for the MW is because of the attractive valuations of its properties, which are located in a prime spot. It's located in Asiana City in Manila, Pasay, sorry. It's located in Pasay, where Mall of Asia is. So as you all know, it's quite a good business district. You have the malls, you have the casinos, and you have some residential units. So right now, I think the land value is around 500,000 pesos per square meter, as compared to its value 10 years ago, which is only around 50,000 pesos per square meter. So that's quite an upside, actually. And lastly, we have Pure Gold. Our target price is around 54 pesos, representing 18.7% upside, primarily because of the bigger contributions of SNR. Recall that SNR brand is also part of the Pure Gold portfolio. SNR is a high margin business as compared to the Pure Gold stores, which is actually quite low margin. So if we're going to put them on a consolidated basis, we have the Pure Gold brand, which has low margins, versus the SNR brand, which has high margins. So it's basically being pulled up by SNR. And with that, that represents around 18.7% upside as compared to its last closing price. Of course, if we have our buy calls, we also have our sell calls. This is pretty much the same as last month. It is URC and Jollibee. First, we have a fully valued call for Universal Arena Corp, because on account of tight competition, pretty much. Right now, URC's products are not really the brand, not really the leading market brand, leading products, leading brands, primarily because of tight competition and the pricing issues and valuations. Also, there are also margin squeezes because of the weak currency, at least in the first quarter. We have to revisit this because second quarter, at least in terms of local currency, the currency is already strengthened a bit. So that we have to revisit this particular reason. But the tight competition and high marketing spending is still there. It's still apparent. So that's why we're still raising our flags for URC. And lastly, we have JFC. This time we are not giving out the target price of JFC. Previously, we have a fair value target price of around 265 pesos for JFC. But because of the current development, which is the acquisition of JFC, of Coffee Bean and Tea Leaf, which is not a leading market brand in the US. It has been operating at a loss for 2 years or more, and it has pretty tight competition and not to mention that it's not really as popular as compared to the leading brand, which is Starbucks. But then again, we already issued a fully valued call on JFC even without the acquisition of Coffee Bean, because we are currently worried that the previously acquired US brand Smash Burger is not yet manifesting some turnarounds in this business. Recall that last 2015, they acquired Smashburger in the hopes of penetrating the US markets and at the same time generating profit from it. But as of the first quarter of 2019, earnings, the financial statements show that actually the Smashburger brand is beginning to pull the margins of Jollibee Foods Corporation. So again, right now JFC is under review. We're going to give an update once we have completed our assumptions for Jollibee. Well, just a bit of a highlight, we have our traders playbook. This is the latest research product that we offer. First, we have it's broken down into 5 parts. We are going to tell you on the event, a particular catalyst. Then we will give you an opinion on that particular catalyst and our recommendation. Then in our recommendation, we will give you our support levels, resistance levels, and cut loss points. Then we also have a technical corner, which will give you our technical analysis and peer tables in order for you to compare that particular issue versus its peers in the industry. So here are some open plays that we have in our traders playbook, which you might consider as a potential investment option. First, we have CHP. As of its first half of 2019, it generated a net income growth of 862% to 1 billion as compared to 100 pesos last year. This is actually a positive for Cemex Holdings Philippines because for the past 2 years, CHP has been operating in the red and if not lower net income, but now we can see some recovery play for CHP. So we expect positive sentiment to flow to the company in terms of its price action because of its strong net income growth. This is also above consensus estimates. So again, we are suggesting to buy the stock at current levels, setting cut loss levels at around 2 pesos and 50 cents. Next, we have First Philippine Holdings. We suggest to begin accumulating the stock and buy more once it pulls back. We're giving a cut loss level of 84 pesos while resistance is at 110 pesos. Reason for the call is because the company has implemented a buyback program. Usually a buyback program is implemented by the company because management believes that at this level, their stock prices are trading at a discount, and it would be an opportunity on the part of the company to buy back the shares so that they could have more exposure on their own shares and potentially sell it down at a profit. Um, yeah, that's pretty much it. That being said, FPH is a good pickup despite the sharpness of its rally, which makes correction likely. We think that these catalysts are significant enough for investors to accumulate. And lastly, we have a sell call on ICT. This is pretty much a technical analysis call. We have noticed that after the stocks rally, ICT is now in consolidation mode and is now beginning to break the 50-day moving average for the first time. So if you are familiar with the charts of ICT, we already see it on the uptrend, but it's now beginning to be break. That particular uptrend is now, let's say, waning. So if this means that we might have already seen the peak of ICT, and if the market already sees that there's no more potential upside on the part of ICT, naturally some corrections might occur, and we could see the stocks prices going down. Well, and that's it. If you have questions, feel free to ask them now. So, okay, we have our first question. So, from Clarkson Fruelda, what is your recommended strategy or game plan for investors during the ghost month? Are you seeing any industries or companies that will break out during the ghost month? Well, to answer your question, usually ghost month is trading at a low, pretty much trading at low levels. That means this could actually be an opportunity for you to begin buying. And this is an opportunity for you to buy the stock on its pullbacks or buy it on its dips. But you have to take note that in buying the dips, you have to make sure that you have a fundamental basis for that. Because if for example, if you buy it on the dips, but if you're going to look into the financial statements of the company, they are seeing um, downside pressure more in terms of its margins, I would not touch the stocks at the moment. Yeah, I hope I was able to answer that question. Okay, we have a second question from. Okay. Okay. Question is, when will the REIT shares take effect in the stock market? Right now, the rules are underway. To be frank, we haven't heard any developments as of the moment, but I'm pretty sure that if there are existing developments already on the way, we would immediately blast it out through our daily reports and weekly reports. Now, second question, with the SMC proposed Bulacan Airport, would this markedly increase SMC shares? If yes, how soon? Yes, this is a potential upside for SMC, San Miguel Corp, because they were able to bag an airport project, which is part of the Build program for the government. This is actually quite positive. Now, in terms of translation to stock prices, well, I would suggest you to begin taking a look at SMC, but still buy on the dips. Right now, it's still quite pricey, so I would suggest buying at around 170, 160. Third, any upcoming IPO shares in the second half of 2019? Yes, we actually have three. So first, we have Axelum Resources, the coconut company. Second, we have All Home by the Villar Group. And third, we have the Kep Wealth Corporation, Kep Wealth Properties. Sorry about that. It's also a property company which operates, I think, the first IPO for the year if they will not postpone, hopefully not. Then As to the other two, we will be giving you more data as the IPO date or final pricing comes along. Any economic risks or any other risks do you see in the second half of 2019? Yes, I've already mentioned it a moment ago that the tight liquidity conditions of the country is still an issue for us. GDP GDP growth of the country should be within 6%. Anything below that could pose as a negative downside. Okay, so at what point or area po magiging affected yung Pinas ng trade war? Can you give some example po? From Jonas Hipos. Hi, Jonas. As to the trade war, this pretty much affects almost everything, at least companies who have exposure outside of the country. So that includes URC, PF, the consumer names, ICT, because they're operating ports. So if there are, say for example, the trade war ensues, so chances are there will be a lot of trading halts that will happen the part of US and China. So probably the port operations could also should have lower activity. So what else? We also have Cirtec and IMI, the tech companies, because these are heavily reliant on the exports and imports of the raw materials. So if the trade war ensues, it's also considered as a risk. Okay. Question from Danny Gan. May I know how did you get the target prices of these stock picks? Yes. In conducting our forecasts in a particular stock, we are taking into account a lot of factors. Mostly, we take into consideration the earnings performance and the earnings potential of the company. Then we make projections based on historical figures and management guidances and current macroeconomic conditions. We all take that into account, then make projections within a 5 to 10 year period. Then once we see the potential earnings performance of the company, we divide it by the outstanding number of shares. First, by the way, first you project the earnings performance of the company, the potential estimated net income. Then you divide it into the number of shares outstanding in order for you to get the EPS. And once the EPS, we also take a lot of things into perspective, like its valuations as compared to its peers. Then we now have to take into account the price earnings ratio, the price to book ratios, and all that. But at the end of the day, it's all based on potential performances of the company. What can you say about All HC? What I can say about All HC is that it's part of the Villar Group. They will be having an IPO of around 22 billion pesos. It's quite huge, actually. I think it will be the biggest IPO in the country if ever they continue. And I think tentative dates is on October 4. They haven't released their final pricing rates yet. But we already have a copy of the prospectus, at least the initial prospectus, and our analysis is already on the way. So, what can you say about Metro Bank? The rest of the banks already made some move. MBT is somehow behind in terms of price movement. This is just a wait and see stance for Metro Bank in terms of price action, because if you're going to look into the charts of Metro Bank, it's quite stable. at the support level at around 75 pesos. So anything below 75 pesos is actually quite a bargain already. Okay, let's look for other questions. Thoughts on Meralco? Well, right now, Meralco is just in line with our expectations. I mean, Meralco is one of the companies that has already released their second quarter 2018, 2Q19 earnings. It's just in line with expectations, primarily because companies have expected volumes to be higher for 2H19 because of the summer season, and at least it generated profit as well, which is quite expected as well. And the good thing about Meralco also is it gives out decent dividends. So if you're on a long term, if you're a long-term investor, usually we would recommend Meralco because what you call this? This is a dividend-giving stock, but for the interest of full disclosure, this is not still not a part of our universe. But at least on a personal point of view, Meralco is a decent stock. So just because of its potential dividends payout. Hello, from Greg Tam. Your thoughts on today's 1.3% drop in the PSEI? Yes, it's primarily because of, okay, let's take out the FOMC potential rate cuts already because it's already expected. It's more of what will happen next week, which I've also mentioned in what to watch out for this August. But to reiterate, we have the ghost month beginning tomorrow. Then we have the MSCI rebalancing, meaning this means that liquidity will be siphoned out of the system. So a sell down is apparent beginning next week, perhaps. And the potential GDP results of the country. That's something that you have to look out for. A lot of questions for all, huh? This is interesting. Promise as soon as we have finalized our assumptions for all HC, we will give you an update. Do you send notice po if we can start availing IPO? Yes, definitely. When you log into our website, there should be a pop-up that says that the IPO is already available to the market. But of course, if it is not yet available, you will not see the pop-ups. Hi, please share the recording of the webinar. I missed the first half of your presentation. I think we do. I think we have a channel in YouTube. Not only this webinar, but also the previous webinars. If you are interested, we usually give our recommendations there. And yeah, you can back watch. Outlook for 2020 at 9,100 index, is it achievable? Well, we did not make that call. I think some other broker made that call, to be frank. But yeah, that remains to be seen. Basta for 2019, our year-end target is around 7,800 to 8,000. First Metro Securities is actually one of the bearish brokers out there. I mean, there are a lot of brokers saying that we could touch 8,600, 9,100 and all that for 2019, but we just stick to our fundamentals. We revisit our models. We just look into the data itself, which should actually be the case. I mean, we also expect earnings growth to be at around 6%, 7%. So we're quite bearish, but right now, based on what we are observing in the market, we're actually quite there. We're hitting it. So would you still recommend holding Jollibee for the long term? it depends on the duration or definition of long term. So for me, if there is an opportunity for you to get out, I would advise you to do so because even though you might incur losses for JFC, you might put it into other investment vehicles that would generate more money and generate profit for that particular fund. Then when you see that JFC is already on recovery mode, you can re-enter again. Okay, from Denigan, which sector would be preferred by the foreigners during the ghost month, or which sector would you recommend in August? Usually, when foreigners enter the market, they are not really focused on a particular sector. They're just focused on putting funds on the basket, because you have to take note that even though the Philippines is trading at billions pesos, if you're going to look into it on the foreigner's perspective, I think we're just only around 5% of the basket. So even though foreigners incur losses here in the Philippines, that's only around 5%, and they could just make break even or even take profits from other countries. So it's not really about the sector. But just to answer your question, we're still maintaining our bullish stance on property, especially in the long term run. US versus China, is the Philippine market a safer investment than foreign ones? For me, it is a positive yes, because if you're going to look at the GDP of the country, it's actually quite high as compared to the others. I don't. Also, we have the build program, the infrastructure ramp up that we have. This is also a positive sentiment. But then again, you just have to look at it on the long term end. We have been recall that we are bearish for 2019, but if you're just focusing within the next 10 years, this is actually an opportunity for you to enter. Okay, I guess that's it. Thank you for the time, and hopefully you'll be in touch with us again. Feel free to watch us again next month, end of the month, as always. Thank you.